Indeed, some call it the mother of all deals.
India signed what is being described as the mother of all trade deals with the European Union, and that description is not an exaggeration. This is a deal that took 19 years of negotiations to finally come to fruition. It connects a market of nearly 2 billion people and covers economies that together account for close to 1/4 of the global GDP. At its core, the India-EU Free Trade Agreement is designed to reduce or completely eliminate tariffs and import duties on trade between India and the European Union. Lower duties on Indian exports will make Indian goods far more competitive in European markets, while reduction of tariffs on European imports will mean greater choice, better technology and lower costs for Indian consumers and industries. The scale of this partnership is already massive. India's bilateral trade in goods with the European Union stood at approximately 114.9 billion euros in 2024-25, with exports worth around 63.7 billion euros and imports at about 51 billion euros, making the European Union India's largest trading partner for goods. In 2023-24, India exported about 63.8 billion euros worth of goods and 25.2 billion euros in services to the European Union. In return, the European Union exported roughly 51.7 billion euros in goods and around 19.3 billion euros in services to India. Within the EU, countries such as Spain, Germany, Belgium, Poland and the Netherlands have emerged as key destinations for Indian exporters. India's major goods exports to the EU include petroleum products such as diesel and ATF, electronics including smartphones, textiles, machinery and computers, organic chemicals, iron and steel, gems and jewelry, pharmaceuticals and auto parts. In services, the largest contribution comes from business services, telecommunication and IT, and transportation services. On the import side, India sources machinery, computers including turbojets, electronics such as mobile phone parts and integrated circuits, aircraft, medical devices, scientific instruments, rough diamonds, organic chemicals, plastics, iron and steel, cars and auto parts from the European Union. In services, India imports intellectual property services, telecommunication and IT services from the EU. The sectors that sit at the heart of this deal and see overlapping interests on both sides include automobiles, medical equipment, textiles, gems and jewelry, leather and shoes, chemicals, transport equipment, as well as machinery and appliances. So what does the India-EU FTA change for these sectors? India currently imports nearly 16.3 billion euros worth of machinery and electrical equipment from the EU. Before the FTA, tariffs in this category went as high as 44%. Under the agreement, these duties will be eliminated completely, bringing tariffs down to zero on almost all machinery and electrical equipment. India also imported 6.4 billion euros worth of aircraft and spacecraft from the EU, with tariffs of up to 11%. These duties too will fall to nearly zero for most products, significantly reducing costs for India's aviation and defense sectors. In optical, medical and surgical equipment, India imports products worth 3.4 billion euros. Earlier, tariffs in this category ranged up to 27.5%. After the FTA, tariffs will drop to zero on about 90% of these products, making advanced medical technology more affordable and accessible. In the category of pearls, precious stones and metals, the EU exported goods valued at 2.1 billion euros to India. These products faced tariffs as high as 22.5% earlier. Under the FTA, zero tariff will apply to 20% of these products, while tariffs will be significantly reduced on another 36%. The chemical sector will also see a major shift. India imports 3.2 billion euros worth of chemicals from the EU, with earlier tariffs of up to 22%. These tariffs will now be eliminated, bringing duties down to zero and lowering input costs for India's manufacturing and pharma industries. Automobiles and motor vehicles have also seen the most dramatic change. India imported around 1.6 billion euros worth of vehicles from the EU, but these attracted a staggering tariff of up to 110%. After the FTA, these duties will come down to 10% for a quota of 2.5 lakh vehicles, marking a landmark shift in India's auto trade policy. On the export side, textiles, apparel and clothing from India will now enter the EU at 0% tariff compared to around 12% earlier. The same applies to leather and footwear, where tariffs of up to 17% will be brought down to zero. This will make Indian apparel, textiles and footwear meaningfully cheaper on European shelves, translating into larger orders and more jobs across manufacturing hubs from Tirupur in Tamil Nadu to Ludhiana in Punjab. In conclusion, the India-EU Free Trade Agreement is not just a trade deal, it's a strategic economic reset. By slashing tariffs, opening markets and integrating supply chains across critical sectors, this deal positions India and the EU for deeper economic cooperation, stronger industrial growth and a more resilient global trade future. This is why after nearly 2 decades, this deal is being rightly called the mother of all deals. Sanchita Mukherjee, economist, is live with us on the broadcast. Sanchita, is that a fair assessment of this deal from the European Commission head herself and many other Indian analysts that this is really the mother of all deals?
Thank you so much for having me at your show. And yes, most definitely, you've summarized it rather well. It is a very, very landmark deal, and it has been 22 years in the making. So I think all of the sectors, all of the sectors that you've mentioned will be impacted positively. And it's interesting to know for the common layman, for the citizen of India, that currently the EU's average tariff on Indian goods is close to around 3.8%. But like you rightly mentioned, for labor-heavy products and consumer goods, for example, textiles, 12%, leather goods, almost 17%, these will day one come down to zero. Which is a huge boost, because these are very labor-intensive sectors in India, and they would augur very well for the Indian economy. India's weighted average tariff on EU imports stands close to 9.3%, with high duties on automobiles, plastic, chemicals, and pharmaceuticals. So the idea is, over a period of time, once this deal is ratified, of course, it will now go for negotiations with every member of the EU, and then each member would ratify it individually. Then it will come into force, and once that is done, the idea is they will move to a 0% kind of a tariff. But I think more importantly, bigger than the tariff would be your access to markets, compliance. Also, let's not forget how we negotiate on the carbon tax, because EU has also offered a 500 million euro fund to help India achieve its sustainability goals. However, having said that, I think industries, companies which are more geared towards producing cleaner goods would have a better term in terms of negotiating with the carbon tax, which is there in the EU FTA as well. So let's see how that is negotiated.
Yes. Now, direct implications. Which are the sectors which stand to benefit immediately in India, and which are the sectors which will stand to benefit on the European side?
I think, like you rightly summarized, within India, the labor-intensive consumer goods sectors such as leather, textiles, gems, and jewelry, to a certain extent, even our chemicals, automobiles, of course, will stand to benefit. And on the EU side, again, it's automobiles, plastics, chemicals, pharmaceuticals. We'll also get access to their medical devices, optical devices, and all of that. There is a bit of a hue and cry when it comes to the automobile news flow, which has happened with the EU FTA deal. But I do believe, so the hue and cry is over the fact that in the luxury goods segment, 110% tariff would eventually come down quite substantially. But having said that, I think there's been a clarification of sorts that almost 90% of the luxury goods is already being manufactured in the form of knockdown units in India. And only the completely built units, the CBUs, the tariffs eventually would come down. And there is a safety valve, I believe, of 250,000 vehicles, which has been given as a stopgap arrangement so that it does not harm Indian automobile manufacturers. In fact, for Indian automobile manufacturers, the EU market has also opened up.
Yes, absolutely. Also, as far as the stumbling blocks, how were those ironed out? How did we manage to, iron out any fissures, get over the stumbling blocks? I think, certain agriculture items have been left out of the spectrum for now. Piyush Goyal, the Union Commerce Minister, has also said 97% of exports of the Europe will fall under this. So obviously there are a selective 3% which have been left out even from the European side. How did we get through those, those obstacles in the end? And do you believe it was obviously fast-tracked in the last couple of years deliberately?
I think these conversations have always been in the making. And without getting into the political rhetoric, in today's day and age, I think every country wants to do good business with each other. And definitely, given that the geopolitics and everything is involved, signing FTAs with each country is very, very important, especially for a growing economy like India. And for us specifically, it's important to note that goods and sectors, especially which are in labor intensive sectors, for example, textiles, leather, gems, and jewelry, these were actually reeling on a global platform with very high tariff impact. Today, in today's day and age, we will be able to compete very, very competitively with Vietnam, with Bangladesh. Gems and jewelry exporters in Surat, Mumbai will all be beneficiaries. So this augurs quite well.
Okay, let me leave it at that. Thank you very much for joining us with your perspective on that segment, Sanchita Mukherjee.
Indeed, some call it the mother of all deals.